Okay, traders, new week, new pips to catch. Just before we actually go into what I'm looking at for this week, let me see what we actually looked at last week and how things actually played out. Okay, so I didn't really post much last week. As you know, I trade gold about 80 to 90% of the time. But Euro GBP is something I actually posted, and I was expecting this to kind of consolidate before we actually see this big move up. And if it does happen, so if I just hit play on that, you can see it's kind of as expected, consolidated since last week. Not much has happened yet. We caught about 100 pips from that, I believe, but I still expect this to come lower into this level here where we're looking at 85215, and that price level would be key to see how we actually react around this level, because as you know, we're always looking at institutional candles, looking at equal bottoms where liquidity sits out to actually take out. So you can see here we've already created a liquidity at the top, and also at the bottom that's now been taken out. So that should actually be an X right now instead of a pound sign, because that liquidity has been taken out. But as this week goes on, we'll see actually how this price actually reacts around this area here of 82215. So if it does actually look positive, then we should get that bullish move to the upside to at least take out this equal high right here where liquidity sits at. As you can see, also we have liquidity sitting on the bottom. So very interesting pair right now. DXY last week also analyzed this to actually come down into this liquidity level to feel its imbalance also before I actually see a move up. Again, similar to Euro GBP, we have liquidity sitting here also. So we could potentially see this sweep even lower, but price needs to come down into this area first before we actually know what's going on. On my new analysis, this created more liquidity, and this is a signature institutional move before we actually see a dip to the downside and then actually go up. Okay, and I'll show you once we're actually going through our analysis. Gold, as you guys know, I trade 80 to 90% of the time because I see it as one of the best pairs to trade. So this was my new analysis on it, and on Friday we actually caught a sell before the big up move. Okay, so I wanted this to be the big one. I wasn't too confident of it because we still had this big imbalance here, and this is why I wasn't too confident of it dropping big time. So I still had a sell open here. I put my stop loss into stop break even straight away because I kind of saw what was going to come next, and this is what actually happened. Okay, so you can see here, put my stuff into break even straight away, and I knew this move was going to happen. I missed my buy limit here. My buy limit here on a smaller time frame, I missed it by 15 pips, and I was quite upset, but I actually got in just straight after. And that was a very risky move, but I got in here and bought here, and I wanted it to come into this area here before we see a big down move. So this is a classic institutional move right now, so we could potentially still see it fall from this level, but I still want it to come into this imbalance level around the 1525 level / 1527 to actually see this big fall. So this imbalance definitely needs to be filled. Okay, so, and as you guys know, I always post updates on my trades as well. So you can see when that happened, yep, that's when I actually got in around this area here. So I said, yep, we should actually get that. And as you can see, as time went on, I said we should get a pullback. And as you can see, we did get that pullback. That was that pullback right here. Okay, and now is basically where we basically started. Okay, so as this week opens, as the market opens at 11 today, we'll see exactly where price currently sits at, and then we'll make a decision on if we're going to buy into that level at 1527 or we're going to sell down to the 1470 level. Okay, so let's get into this week's trading chart. Okay, so this week I'm not looking at much. I'm only looking at two pairs that's caught my attention: EURAUD and EURNZD. These are the only two pairs right now that have a majority of my attention. As you know, I'm always looking at gold, so that's obviously going to be a thing. But apart from that, the EURAUD and EURNZD are catching my attention. So EURNZD, as you can see, we've been floating around this area for a long time. We had this equal bottom of liquidity being taken out. I was waiting for it for a long time. I knew it was going to happen. And here we did. We actually finally captured it right there. Then we created another liquidity zone of a double bottom. So you can see this is now heading up. And you're probably thinking, why is my analysis biased to the downside? Okay, so if I grabbed the fib right from the top here to the bottom, again, you can see exactly what we look for. The -27 and -61.8 are our TP levels. Okay, so looking at that, you can see how the 70%, 70.5 Fibonacci level meets perfectly with that. And on top of that, we have our institutional candle right there. Okay, so to add to this, we're going to add a fib time zone. Where is it gone? Fib time zone. So again, fib time zone right from there to here. Okay, you can see why I've now got that box right there. Okay, so in between the 61.8 and the 70% level is where I'll be looking to sell, which is why I've got my sniper entry right here and arrow pointing in this box. Okay, so this is what I'm looking at for Euro NZD, as you can see, we'll be risking about 40 pips to gain a potential of 500. Okay, so that's Euro NZD. That's what I'm looking at for this week mainly. And then on top of that, we've got, actually, yeah, I can show you why I want it to come down to this level also, because we've got equal lows right here to sweep. There's a lot of liquidity sitting there. Another equal low, a lot of liquidity. We've got imbalance right here. And then on top of that, this is the daily institutional candle. Okay, so this whole setup right now is looking very, very good to me. It's creating a massive M pattern. And a smaller time frame, M patterns are targets rather than entries. But here, I can already see what's happening. So again, we've got more liquidity sitting down to this side. So when it creates that massive M pattern, it's going to come up a little bit here and then bam, take out that liquidity right to the downside. Okay, so very, very interesting trade we're looking at for Euro NZD. For Euro AUD, quite similar. It's shaping up a little bit different. But again, my bias is firstly to the upside and then down. Okay, so quite similar to the other one. So you can see we captured liquidity right here, took that out, headed down. As you can see, we had a perfect entry of, I believe this drawdown was about, how many pips was that? We had a 4 pip draw, or 8 pip drawdown, and then we actually ended up here. So I wanted this whole move to actually happen like this. I'm losing all my tools. I wanted this whole move to actually happen in one sequence to actually take all of this out and then head up. But as you can see, we kind of created a triple bottom. Kind of, you can see 1, 2, 3, kind of a four areas of support right here. And then it looks like it wants to head up a little bit more, but I won't be surprised if you actually see this coming into the opening of this week. If it just kind of heads up a little bit, doesn't kind of reach this level that I want to, and then pop down before we see the move to the upside. Okay, so that's what I'm currently looking at for Euro AUD to actually happen. And again, if we're thinking, how did we find this trade, or how did I find this trade? Again, Fibonacci from top to the bottom of that wick right there. Let's just drag it out so you can see exactly my thinking behind this. Okay, so again, exactly the same as Euro NZD, between the 61.8 and 70% level is where I'm looking to execute this trade. And if I add a fib time zone to that, okay, add the fib time zone to that, you can see right here, 61.8, I've got this box right here of where I want it to actually, execute. Okay, so that matches up perfectly. Okay, so again, I want this imbalance to be filled and then head up, or we could see a further drop into these levels, because we still got open orders here that need to be kind of mitigated out. So this could drop either to here and head up, or we could drop into one of these two levels. Okay, so which is why I got both of them marked up and kind of ready. So when I'm selling this, I'm not going to have a take profit. I never usually have a take profit anyway. I kind of let it go as far down as it can. So we could see this actually coming from that box into there, drop to one of these levels, this one or this one. Okay, so we're looking at all of this to kind of come into. Okay, and then from there, we should see a big move to the upside. Okay, so if I go on a daily chart, just reset that so you can get the perspective of what I'm looking at. So looking for that to come down into there and head up into there so we could get our big sell, or down to here into there and then we get our big sell from there. And you're probably thinking, why do I think it's going to come into those areas? Again, Fibonacci. It's just literally rinse and repeat. This is how I trade. It's very simple. Just understand the concepts of 2 or 3 things and put it together and you got your trade. So right from the top to the bottom there, waiting for this. It's going to go, I expect it to go past the 78% level, because on a smaller time frame, we have this institutional candle to actually mitigate out of. And then, as you can see, minus 27, minus 61.8 are TPs. And along the way, what does that create? So we've created triple bottoms right here, very, very equal. A lot of liquidity to take out at these levels. So the minus 27 would do that. And then if that happens, then we're going to create more liquidity here, because if you think about it, if it comes to this minus 27, what do we have here? Again, more liquidity be created, because everyone will be buying off these levels thinking, oh, it's a great support. Okay, so that creates more liquidity, and that's only going to be a retracement. There's only going to be a retracement, and then bam, it takes out all of these stop losses again. And then if we're looking further down, what else have we got here? What else have we got here to actually play with? On a smaller time frame, let's put this down to the 4 hour. Okay, let's just come across. Let's just come across to this. Okay, you can see where I've got my eye. Let's just zoom in so you can see exactly why I've got the eye there. You can see I've got this eye, there's a gap there that kind of got filled. Done a lot of little price action in there, but this is still a target because it hasn't been kind of filled properly. Okay, so it's only created buying opportunities in there and it's kind of created some selling opportunities. Okay, so on top of that, we have an open order on a daily. This is the open order. I mean, 4 hour right here. Open order to be mitigated out of. Okay, so this is why this is my target right here. Okay, it just all comes together so clean, and then you understand exactly what's happening in the market at all times. A very, very simple trade to pick out of. Okay, so that's all I'm really looking for and looking at this week. There's not much really going on apart from that. The USD pairs of finance that is shifting. USD Chef, I don't really like trading that. It's really slow, same as USD JPY. But we saw a big movement on USDCAD last week. Okay, so this is my initial bias. I wanted it to come into this level before I sold. As you can see, it kind of created a lot of liquidity here, but I never actually came into our entry, so I never got into this trade. And here, it's creating a massive M, which means a lot of liquidity. And this is what happens for institutions all the time. And then you'll see it literally just pop up into there, capture all of this liquidity. It can either mitigate out to drop again, or it'll come slightly down and then push into this level. Okay, so that's what I'll be expecting in USD CAD, and then we'll see exactly how that actually plays out. But apart from that, there's not really much I'm looking at for this week. The DXY chart I was showing you, remember I said it created more liquidity over here. I was expecting it to come all the way down, but you can see it happens time and time again. It creates liquidity, pops up. So everyone's thinking, oh yeah, it's going up now, and all of a sudden, bam, it just pops down, takes all that liquidity out, and then heads into the upside of where everyone expected it to go anyway. And then from there, we should see kind of a massive fall for this pair. This is what I was analyzing for some time. Again, a massive fall. So if we take our Fibonacci from top there to the bottom, you can see exactly the same concept over and over again. Minus 27, minus 61.8, and then we should see that big fall, which means all the pairs end actually starting with ending with USD, sorry, should now be kind of in this phase, should be actually buying. So let's say you had a EURAUD when DXY is falling, then you have a big buy to the upside, and that kind of matches up with my analysis here. Okay, I haven't looked at EURAUD for a long time because I just hate this pair. It moves really slow, and yeah, me and it are not best friends. But let's say something like GBPUSD, okay? Something like GBPUSD, when that finally starts dropping the DXY, then we should see this start rising. But I expect all-time lows for the GBP pairs, as I mentioned in my previous video, because again, similar concepts, so you're just using a fib. And you're probably thinking, how do I just know this from the fib? It just happens time and time again. And on top of that, we've created a lot of liquidity to the downside here. All these equal lows need to be taken out, okay? This is how taken out, should I say. This is how the algorithms actually work on the trading charts. This is what the institutions do time and time again. So we'll keep on watching that. I already posted my analysis from about, was it last week or the week before? Okay, so we'll keep an eye on that. But for this week, EURAUD and EURNZD are ones I'm keeping a very, very, very close eye on. Okay, so I'll post this, as you guys know, I'll post this on my trading view, and then if you wish to follow the idea, see if you can actually make some money from it, then by all means do so. And like I said, I'm not a financial advisor, so if you lose money, don't come back to me and say you told me to buy or sell. That's not my issue. Okay, so that's literally it for this week. And yeah, I'm just going to leave it as that. So happy week, happy trading, more pips, all of that good stuff. And then we'll catch up again sometime soon. Okay, feel free to follow me on Instagram, message me on there if you want, trading view. The links will all be in the bio. So there's no excuse why you can't reach out to me if you have any questions. Okay, until next time, take care. God bless.